Question: will the federal government ban private equity from buying single-family homes in Canada? The idea is that by restricting big money from scooping up houses, we might ease affordability pressures. But how realistic is that? What would it actually look like, and what could go wrong? In this video, I'll walk you through what private equity in housing really means, how this kind of policy could change inventory and competition, and what some of the unintended consequences might be if there are any, and how it might affect us in Calgary. So let's get into it. So before we get into whether or not a ban is possible, it helps to understand what private equity means in the housing context. When people talk about private equity or institutional investing in housing, they're referring to large institutional investors like REITs or pension funds that treat housing as a capital asset rather than just a place to live. You might hear this trend referred to as the financialization of housing. In Canada, most of this activity has focused around multi-unit rental properties, properties like apartment buildings or purpose-built rentals rather than detached properties. However, there's a worry now that these large institutional players might start buying large amounts of detached single-family properties as well. The Office of Federal Housing Advocate now estimates that between 20 to 30% of Canada's purpose-built rental properties are now owned by these large institutional investors, which indicates just how significant their presence has become in the rental sector. Unfortunately, we don't have very clear data on just how big of a portion of the single-family housing market is owned by these institutional players. And that's largely because Canada doesn't currently maintain a comprehensive national database on this. But there's growing concern that these larger firms can scale their operations up enough to influence rents, prices, and the broader market as a whole. And this is why the question of whether or not Canada should ban these private equity firms from owning single-family homes has gained traction in recent years. So, is the federal government actually planning to move on this? Well, there's nothing written in stone yet, but there are definite signs. In April 2024, Ottawa announced its intention to explore ways of curbing private equity activity in the residential housing market. And this includes the possibility of banning large corporate entities from owning single family homes. So far, we're still waiting for any kind of legislative framework or any kind of clear timeline. Now, there is some precedent for government intervening in the housing market. The foreign buyer ban, for example, already restricts foreign individuals or corporations from buying single family units, and that measure is currently in effect until January 2027. This shows that Ottawa is definitely willing to restrict ownership in certain circumstances. So you can see that the idea of a private equity ban isn't that far from laws that are already on the books. So if a ban of this nature is eventually enacted, the key question will be who it applies to and what types of properties. The most likely targets would be private equity firms that seek to acquire single family homes to either rent or flip, REITs that hold smaller scale residential assets, or larger firms looking to get into the single family market. Also, pension funds that invest in housing could also be affected depending on how the rules are written. A law like this would likely apply only to detached properties, semi-detached, row houses, that kind of thing. Basically anything in that 1 to 4 unit category. Whereas larger apartment buildings would likely be excluded, as that's seen to add to rental inventory rather than detract from it. So larger firms that already focus on predominantly multifamily developments might not be affected. Enforcement here would likely end up being relatively complex because the ownership structures of these companies can be layered through shell companies or subsidiaries. And this means that certain companies might decide to reorganize their structure to technically comply while still participating in the single family market. One thing to note here is that most observers expect that any restrictions would apply only to new acquisitions and not force any existing owners to sell. So it would stop any new purchases, but it would likely grandfather in any purchases that were made in the past or currently being held by these corporations. So, like everything in economics, a ban like this is going to have intended as well as unintended consequences. On the surface, banning large corporations from the single family housing market should make it easier for the individual buyers to compete. If these large institutional players can't outbid regular families, there should be less upward pressure on prices, at least in major cities. It could also prevent large firms from absorbing too much inventory and preserve more homes on the market for owner occupiers. However, there are plenty of side effects worth considering. Without these large buyers in place, some sellers might find that there are fewer qualified bidders, which might reduce liquidity or slow the pace of transactions in general. One big thing to consider is that investment capital could simply shift to other areas of the real estate market, such as multifamily development or the commercial real estate market, where the returns are going to be more predictable. So, some analysts warn that by removing these large institutional investors, it could also slow the pace of redevelopment and renovation activity, as a lot of these firms specialize in renovating older units. Legal and enforcement challenges would be another issue. As I mentioned, there's a lot of different ways that they can structure their companies to get around these types of regulations. And you'd have to be careful that the average mom and pop investor doesn't end up feeling squeezed by regulations here that are too tight or restrictive. Here in Calgary, the effects would probably be a little more muted than in places like Toronto or Vancouver, simply because the institutional presence in our housing market is not as pronounced as in those markets. Still, a ban like this could affect how investment capital flows into infill or densification projects over time. Broadly speaking, even if private equity is banned from buying single family homes, that alone is definitely not going to solve the affordability issues that Canada faces overnight. The housing issues that we're facing in most of the major Canadian cities is mostly a supply issue. Without faster approvals, better infrastructure support, and more efficient zoning, prices are going to remain under pressure no matter who's allowed to buy. So, what would this actually mean for us here in Calgary? As I mentioned, we'd probably feel less of an impact here than in places like Toronto or Van. Our detached housing market in Calgary is still largely owner occupied, and institutional involvement is limited. For most buyers and sellers, they wouldn't feel much overnight. That said, there would be definite gradual effects over time. Removing large scale investors from the market could slightly ease bidding pressure for certain buyers in certain neighborhoods, and would generally make conditions more favorable to owner occupiers overall. Over time, capital would probably end up being redirected towards larger projects, and that could mean a positive shift for Calgary, especially in the rental market. The big downside is that if investment slows too much, it could reduce redevelopment in Calgary, especially in neighborhoods where institutional players are actually buying up and refurbishing these old properties. Small scale investors might feel a bit of fear or trepidation, fearing that they might end up being swept up in these larger rules that are meant only for these institutional buyers, and that could slow things down at least temporarily. So while the initial impact here might be moderate overall, it's still worth keeping an eye on, as this is a Canada-wide policy that would definitely change the nature of the Canadian housing market in general. So, will the federal government actually enact this policy and ban private equity from buying single-family homes in Canada? Well, the intention is clearly there, and public pressure has been building for a while, especially in places like Toronto and Vancouver, but the path forward is very complicated. In my opinion, I have to say that I'm not necessarily opposed to a policy shift like this. For Calgary, the direct effect might be limited at first, but you definitely see a larger impact as time goes on. I think in this case, if you were to enact a policy of this nature and it was well written and targeted specifically towards large private equity firms, it might reduce some of the pressure, especially in larger Canadian cities. Although at the end of the day, this is a supply side issue more than anything, and we just need to build more homes. So hopefully you found this video helpful and informative, and if you did, please hit like and subscribe so that you can stay up to date with more videos as they drop. Thanks for watching, and I'll see you in the next one.